The big news overnight that everyone was waiting for was the Fed's interest rate decision. The US Fed has decided to leave the interest rates on hold, 4.5%. That has sent, let's call it shockwaves through the market. Bitcoin is up over $87,000 as I film this, 5% on the day. The first key level we were watching, it has tested and closed above. So we've got 1 day there. Now, the other things that have happened are investors have remained relatively bearish amongst all of the going on. So we're looking at Bitcoin today, the S&P 500 on its bounce, a quick check of the commodities, and we might even have time to squeeze in a couple of altcoins like ETH. Make sure you hit the like button, subscribe to the channel. It's your home of macro cycle analysis. We're going to look at the real estate cycle, Bitcoin, cryptos, and of course the stock markets. And we're throwing in a few commodities there as well. If you haven't already, subscribe to the free report. There is a link in the top of the video description and on the homepage here of the YouTube channel. That'll get you that report once a week, plus a couple of free bonuses there throughout the period between now and when the next report comes out. All right, guys, quick look here at your 18-year cycle. Obviously, nothing has changed here. It's an 18-year cycle, 14 years up, 4-ish down. We're still up in amongst all of the wall of worry news that we hear coming out from the markets. Winner's curse phase, final leg of the game. More upside is what I'm seeing, at least for the real estate prices in the US, the economy, the stock markets. I think Bitcoin is going to get dragged along with it to higher highs. Of course, in the short term, it's where people get really caught up. You see it in the comment section for sure. Everyone's got a different view about time frames. Some people are looking at the hourlies, some are on the dailies. So try to understand which time frame it is that you're looking at and trade that. To the upside, there still seems like there's more there. But today, or at least for Bitcoin, it has broken past the $86,000 level on the short term. So that was the first level that we've been watching, talking about on the channel. Of course, you need to keep reminding ourselves, or at least as traders, investors, you're going to keep watching these levels and seeing how the market responds to them. That's why you typically see a lot of the same analysis day in, day out, because you need to see what the market does. How does it react to those levels? In this case, we got some good news for the bulls, a daily close. So when we're going for about 3 days here. Typically, if you see 3 days in a particular direction, that's going to give you a higher probability. So I've seen the comments from you guys, good stuff on those who are understanding the difference between a certainty and a probability. Beginners looking for certainties. Let's call it people who are advancing understand the game that trading is, and it's the probabilities. So the next test, at least according to me and my analysis here, we're looking at the diagonal downtrend. So this is it from the highs connected to the next highs, somewhere around, if it was to happen today, it's going to be somewhere around 91,300. Tomorrow, it'll be somewhere around 91,000. The next day, you get the idea. It's going to keep dropping from that point. Now, I've also talked a lot about the 89 to low $90,000 range, and that is the significant 50% level here. That's at 93,000. That's essentially, well, it's not going to change unless we get a new low in here. And that's the next piece that I want to look at when it comes to seasonality for BTC and how this market is, let's say that it's sort of replicating 2017, but of course not exactly. So I want to have a look at how that pattern occurs across March, April, and May, should we see a test to the upside here. So that's BTC on the short term. Here it is. Let's have a look at the curves. Now I'm going to just zoom in on this section right here, if it allows me to. There it is there. So I'm on the TIA predictive cycles. It's on log, which is why you see a greater difference between each of the lines. I'll take this off log so you can see there, and we'll zoom in on the time frame that we're looking at. The blue line is the actual time frame here, and the purple line is the halving years. I've kept those on, even though it's not a halving year, is to look at where Bitcoin has had its turning points in the market. It doesn't mean that it has to be a high or a low. It's just which dates have worked out throughout its history to give us turning points. And on the red line, I've just kept the 2017 number in here. You can see right there. Now, there are obviously a lot of similarities between 2017 and 2015. Should we see this low now, like we saw last week, or coming in over the later half of March, both of these cycles suggesting we see some sort of upside from here, which might be what's happening today. We're getting to that point where Bitcoin is going to test the next level, which is around 91K, 93K, and if it can get past the Trump post, the top on that day was $95,000. Now that doesn't mean that it's going to skyrocket like the red line here where it went to new all-time highs and kept moving. We're just looking for cycles and turning points on the day. It's basically the swing direction of the market. So the crypto data for today isn't looking the greatest. You have, well, at least the last 48 hours, there is a breakdown of the total exchange volume here. Let's have a look at it on a 12-month basis. There it is, $36 billion, which comes right back to the November period. So there's November 1st, 2nd, 3rd, 4th, 5th, before the election, and it's back to those levels. It's not the end of the world. We do have lower highs, lower lows, and we need to see a turnaround in the exchange volume and basically the exchange volume and of course search volume as well to see the prices continue higher. This has happened before. You've got October. We're still heading lower. Now this has happened before and investors weren't ready for it. You can tell at the time there's September and October, the exchange volume kept going lower. The same sort of comments like we're seeing now, people expecting lower prices, 60K, there's another major dip coming up, the cycle's over, the top's in, all those sort of same calls. And then through that period, 2023, you remember there was a lot of professional traders were shorting the market on the way up. They saw the breakout at $30,000 for BTC and they decided to short this move from here all the way up into the ETF news. There's 48, 49K, bit of a pullback, and then the big boom right up to $73,000, $74,000. So a lot of large speculators, a lot of traders were trying to short that market because they thought this was it. And then they kept looking back for major resistance and you got a short-term pullback and then a big explosive move after it. Same deal with this double top. Almost the same deal. It basically blew straight through that double top. You can almost call it a slight triple top here as well. Big breakthrough, and then it got to the 49K. So the same thing happened back here. That's your September period, October period. The exchange volume was dropping off until it was able to break out at that point. So we could be on the cusp of this right now. The thing is, no one's going to know until we look back on this particular data. That's why at this time, I'm still on the side of we're probably, from what I can see with the data, what I can see with the charts, is we're probably forming a low, if not the low's not too far off, and we will want to see it bounce back relatively quickly. For example, if Bitcoin ran up to 91, maybe 93, maybe even tests 95 and closes back under, that could be a sign that we're going to come back down and test a couple of the next levels or the levels that we just broke out of to see if there is actually support there and buying support coming into the market, say like 86K or somewhere on the diagonal downtrend here, basically flipping the diagonal downtrend. So it can come down, it could just take a bit more time. And speaking of time, we have the Fear and Greed Index is updated today. It's the first time it has hit neutral in 24 days. Last month it was at 47. And 24 days ago, you got the 24th of February was at 49, basically a neutral reading. And through this entire period, we've had roughly 23 days of extreme fear and fear. And if you've been following, we're getting very close now to the end of this move. I'm looking for somewhere between 4 and 5 months. The 5-month time frame, as a reminder, takes us out to around mid-April. Each of the previous times Bitcoin has gone on one of these big corrections has been roughly around that 150 odd days. You can go back to 2023, 148 days. So yeah, basically things are looking relatively similar to each of the previous times throughout this cycle. That's why I like to keep following what has worked in the past. So the next thing that I think investors aren't ready for is if we do see a significant move to the upside. If Bitcoin's able to break past these key levels in the high 80s, low 90s, then any sort of pullback here would probably be similar to what happened in September in 2024 and potentially in October in 2023. The thing there is that it's a higher low. You can see here on the chart, nice solid higher low above the diagonal, nice solid higher lows. This is in October here above the diagonal, but also the September low that was actually closer to the market. Extreme fear coming out there. See at the bottom here. And a lot of people thought this was going to go further. They thought you were going to see sub $40,000 and there was going to be some sort of significant move down and then a big bounce up. Like I've never seen markets work like that where you get big breakdowns and a huge move up, except for the COVID crash. So there's always someone who thinks there's a black swan event around the corner, and black swans just don't work like that. So the thing that would be looking out for next, test of the key levels above. If there is a pullback, great, that's fine. It's going to at least fear more of the people out of the market, and looking for some consolidation above the previous resistance levels, now becoming support. Time frame's looking all right. Exchange volume, it's okay if this thing keeps going lower or at least stabilizes somewhere around where it was before in the $30-odd billion. It's happened before and we were able to break out to the upside. And did I talk about the sentiment? Yes, sentiment is also looking all right, like a reset going on here. Now, the search terms have continued to drop off, but they haven't put in new lows yet, if at all. Bitcoin was at 18, still at 25. So there's still more interest in the game than there was before the presidential election. And then there was still more interest, before 2023 as well. So the interest is still looking relatively healthy here. Higher lows for BTC at the moment, higher highs. Crypto, the search volume here, higher highs, higher lows. That's also looking good. So let's switch gears and have a look at more reasons why investors probably aren't ready and what potentially happens next for the stock markets. For some reason, my camera's just died, but I'm sure you can get over not seeing my face for the rest of the video. We'll fix it up for the next one. Okay, so my theory on Bitcoin and the stock market, the S&P 500, is that we need to see some more clarity with the S&P 500, a clearer trend to the upside, breaking fresh highs like we've checked out when it comes to the S&P 500 on a monthly basis here. Previous bull markets have been very, very clean for the S&P 500. Let's put this on a log. You can see going back 2016, 2017 into that peak, very, very clean move. This is uncertainty. Bitcoin also uncertain. This is clean. Bitcoin in a bull market, Bitcoin in a bull market, Bitcoin in a bear market, and accumulation. Accumulation happens when there is some uncertainty, just like what happened in 2022 and 2023. People very uncertain, thinking that the conditions were extreme recession, obviously didn't happen. So looking for this uncertainty to resolve itself in the second half of 2025. We're in the second half. Obviously, quarter one is nearly done. And the look here on the short-term basis, or on the daily chart, we're seeing a few days here to the upside, but the closes still aren't that strong. The volume is still underneath the average volume, but the average volume has ticked up because of the previous days to the downside. So that's increased the average. And what we've seen in the past as well is that when there is a lack of volume, the market climbing on lower volume, eventually the price does come back down to fill in that gap. So let's have a look at where that price started, around 5,600. This is from where the volume started to drop off. So even if we're to see a rally here, let's throw it on the S&P 500, the E-mini futures. Here are my rally prices looking at around 58.40. That is also the diagonal that the S&P 500 has been tracking up, connected to the banking crisis low and the August low, just broken underneath that, comes in relatively close to the 50% level of the entire move to the downside. Maybe we see a bit of a pullback, just like what happened back here. So that's in August and September 2024. And again, that pullback might bring on a little more fear to the market. At the moment for the S&P 500, it is, it's at 22 today. Yesterday I was at 19, last week at 20. So basically tracking around extreme fear. And investors typically, time and time again, it's why 90+% of people don't make it in the markets, or they basically just churn away all of their gains. You can see here the AAI Investor Sentiment Survey going for nearly 40 years. The investors have gotten extremely bearish on the way down here and at the low. This one here is pretty much at the low. That's this little white arrow here. So basically that day right there, the sentiment survey comes out. So they're probably being surveyed through this period of the market. they're at one of the highest levels of bearishness, 59%, only beaten by a couple of weeks earlier, 60%. That was the 1-year bearish high as the market's pulling back from all-time highs. Now, it's crazy because, it's been getting it wrong time and time again. We've looked at the historical data here with the II investor sentiment survey, and it almost picks each of these lows to a T. Now, sure, it's a bit harder to read sometimes because there was also extreme fear on this bar on the way down, but they typically turn bearish when it's going down and turn bullish towards the peaks. And there are a couple of big bullish readings towards some of these peaks as well. So I wouldn't use this as a standalone system, more so as additional confirmation to any plan that you've got going on. So the S&P 500 also looks like it's in a bit of a rally here. Maybe that's off the back of the Fed talking about 4.5% is going to stay. They were a little bit more dovish around what they were talking about here, saying, look, things might be improving, and if they do and inflation drops, then we've got the means there to drop the interest rate. But for now, we're just going to leave it on pause. Aussies, we've got this coming up in a matter of seconds now. Unemployment change, that's not really going to matter to the markets, is it? So we have 7 more weeks, 48 days to go until we get the next interest rate decision. So maybe the markets will be hanging on for that, bit of a grind up and a grind down. Doesn't look like there's going to be an interest rate drop then either, but a little, there's more of a chance at the next meeting than there was at this meeting. It was basically like a 96% this meeting that there was going to be no drop. And of course, there was no cut in the interest rates. So another piece to the puzzle, surveys says, so we've looked at surveys with the II. Now we've got this survey here. Newsletter writers are bearish on stocks. So this is essentially what people are reading. And although I love the technical data here, we're looking at the charts, stuff that really can't be disputed, like that's the price for the day, that's what's happening. Well, also these, the reports that actually, well, what are people deciding to read? And they prefer to read bearish news. I mean, that's why you typically see a lot of headlines and titles around a little bit more of a negative thing. And you guys get it. You're here in a video that's 15, 20 minutes long already. You're getting it. So you guys that are here 15, 20 minutes into a video, you understand the drill. This is how the game works. But if you're able to understand what the charts are saying, what the data is saying, then of course, you're hopefully doing a lot better than 90+% of people. So bulls are anxious about whether a correction in the world's most benchmark equity, obviously the S&P 500, is going to morph into a bear market. I mean, when are they not? This thing has been going on forever. So it's been time to buy when newsletters sell. So they're getting the information here off one of the largest newsletters or one of the big ones that everyone looks at. They may scramble now as more breadth searches. So we're seeing these lows or around the lows. So we're not trying to call the exact point, remember? But at these times, investors' intelligence, bull-bear spread, seems like we're coming around those levels. And if we are coming towards some sort of low in the market, as this says here, the breadth in the stocks that are hitting new highs to new lows is increasing, and that might lead to a quicker rise. Now, does that rise hit the 50%, bust through, come back on top? Or do we get rejected and just test these levels for a little bit longer? That's the big question at the moment. So that's what we're looking at over the coming days. Is it going to get rejected, or are we going to see some confirmed consolidation above the previous support resistance levels? So overall though, when you look at this and what it has shown over the last, hey, let's go back to 2010. So the last 14, 15 years, it's had a pretty decent hit rate. 1, 2, 3, 4, 5. We're into the 6th reading now, so we don't have the data on this yet. But this reading here, well, it basically failed. It's okay. Sometimes things do fail. It came in towards the peak. You had the correction, but then of course the market regained from that point, and the bull market continued. S&P 500. Oh, let's have a look at the data here. All right, so S&P 500. 12 months later, once we see these signals. Roughly 70% of the time you get positive results, and if it is a positive result, 22% gain on the S&P 500. That's going to be pretty crazy for BTC, but of course, what do you need? You need patience. It's just like this decline here. If you don't have the patience, you're going to get chewed out like the rest of the folks who are waiting here day to day. You know, they've bought in back in November, hoping it was the next greatest, latest thing. They've had to endure 80, 90% on their altcoins going straight down. And they've all sold out here. I've seen the comments. You've probably seen them as well. And they're, from here, they're just waiting now, or they just won't look at the market again. And then when we start to pick up, you see the headlines come through. Once we hit 100, when we hit 109, 10,000, they'll start to pile back in, and that might shoot things up quicker, leading to the end of the cycle. Speaking of the end of the Bitcoin cycle, as I was talking about BTC there, I think the Bitcoin top is most likely going to come in before the S&P 500 top. As I showed in some of the previous videos, it's happened time and time again. And MicroStrategy is a countdown metric that I'm testing out this cycle, because last cycle, it was a pretty good metric to show the tops. February came in, 9 months later, Bitcoin topped, MicroStrategy putting a lower high and then dumped from that point. We're getting something similar again. Huge gains. So if you got the gains early on from 2023 into late 2024, so almost 2 years, friggin' hell, you smashed Bitcoin, 4,000%. But now, this isn't looking great, and it's broken below 50%. The bull market 50%. It's trying to recover here, but on lower volume. It can do it. Maybe it comes back and does what it did last cycle. See here? You got this move, and it did recover, but I mean, it didn't recover to the previous high. And it looks like it's possibly going through something very similar. I'm on record saying I don't think this is going to make it to a new all-time high, especially at where it currently sits. So yeah, let's stick with that. Someone else said they disagree, but here we go. Countdown from today's date, from the next trading day, is about 5 months. That would be crazy. If August was basically around the top for BTC, just looking at a 9-month here, that's the first thing. Now, before you take that as a soundbite, it's just a metric that I'm looking at, one of, for this timing. I'm still not going to just trade directly off here and say August 20th, game over. Definitely not. That would be absolutely stupid. But I think it's worth watching because it did something similar last time. And so maybe we do get an extension here. Maybe it goes out to 300 days, maybe the end of the year, October, November. That would take you about a year, right? So it's still not really out of the question. Somewhere around the second half of 2025 could be around that top, and that's exactly what I am looking for with the MicroStrategy chart. But the big one that everyone's following at the moment is definitely gold. $3,000, $3,060 here. Generally, when gold keeps rising like this, it's obvious that the market, or at least investors, are looking for somewhere safer to eventually put their money or put their gains that they're making out of the market. Yeah, of course, gold has been going up while the stock market has been going down. So are they taking their gains from the S&P 500 and dumping some of it, a little tiny bit of it, into gold? Obviously, we'll have to tell after the fact, but that's a plausible scenario right now. And a couple of last things: USDT dominance. Before we look at ETH, is looking pretty damn good. Now, make a quick mention again, like the video, subscribe to the channel if you haven't already. Link in the video description for the free crypto and economic report. And a shout out to our channel sponsors. They make the videos possible. It's bybit here. So the bybit card is 2 years old today. You've got 10% cash back up to $300. You can get this when you open your account, and you can go through the prompts to get your debit card. I've been using it, works very well. Basically, just put your crypto onto it and you can spend crypto from this card, plus you can get earnings from it as well. So USDT has broken under the 5.2%. This is one of the key levels that we've been watching. Still, I would still love to see this volume increase quite a lot from this point, but at least we've got a breakdown of the swings, lower highs, lower lows on the swing chart. So that's a really good sign. It's on the daily at the moment, lower highs, lower lows. So we need to see this thing continue on from this point. The 50% level is where it needs to get back to. We need to see a dump back down to 4.7%, taking out the swing lows, taking out the 50% level. And that is going to be looking very healthy for Bitcoin and cryptos. So if we were to see something like that, well, of course, you're going to see Bitcoin and crypto go up. But if this gets a bit of a rally into a lower high, that's potentially where you see the what are we talking here? The extreme sentiment come back, potentially a dump back down into fear, or hopefully some extreme fear to really shake things up a lot. So you'd be seeing this rally would take the sentiment back down. The drop on USDT would take the sentiment back up. Remember, this is money flowing out of USDT, which is why the dominance would be dropping here. So good things at the moment. If we take a look at the 50% from the top to the bottom, that also comes out at 4.78%, and the major 50% at 4.75. So it's a very, very important level right now. You can see when I scroll right out, it's basically the all-time high to the all-time low 50% level. They were the tops there of the previous cycle. Once that busted through, that was pretty much absolute game over. I mean, it was game over from this point at the all-time high, but when it broke through, there was really no coming back from that. So if we're able to get below that level, that could be big things for the market into this final stage. If it finds support, watch out. Ethereum having a reasonable day. It did about 5 or 6% on the day before we refreshed for the new day. And the ETH BTC also had a slight increase as well. But of course, Bitcoin was also up on the day. ETH USD needs to do a lot from this point. First thing, close above 2150. Second thing, close above 250. Third thing, 2900, which is where the breakdown started from and is that weekly swing top. It's not out of the question, it's still possible, but while it remains underneath 2150, this is potentially just a sucker's rally. If it rejects here, there's always ifs. People can't handle that, but if you can, good for you. If rejects, comes back down, I'm looking for a test of around 1600. The low's back here at 1500. Any of those break down, then I'm looking back towards 11 to 13-ish hundred. So lots of work for it to do to get back to the upside. Otherwise, it's a very easy path down to about 1600 first up. Thanks again, guys. Like, subscribe. I'll see you guys back here at the next video. And for the bulls, let's charge on. 91, let's go. Peace out.